Hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and let's break down today's market price action. As always, we'll be taking a look at broader market analysis, then take a look at our sector heat map, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So let's just jump into market analysis here and just jump into the headlines today. Well, what we are seeing today is a continuation of that recovery that's taking place in the broader market. So they continue to recover, and volatility is now back at that support level. Before that big crazy spike happened, we are back to the same volatility as we were at the beginning of the month. So quite a nice recovery. So if you take a look at the numbers today, well, Dow Jones up 0.61%, S&P followed by 0.43%, and we are looking at Qs at 0.21%. So we continue to see this small caps lagging. Remember, one of the big topic that we had just a month ago was the whole market rotation, where the small caps were rising and the money was coming out of the big caps. And then here we are. That trade seems to be in the past here. We are not seeing that small caps outperforming. They're actually underperforming. So it seems like that's the older trade is back on, where we continue to climb into these big tech here. Now the oil market down, and then we're seeing a slight dip in the gold market. So if you take a look at the chart here, well, this chart is just a massive recovery. You can see that where we had that big plunge, we are now almost back to where this all started from. So at this point, the big question is that can we continue running higher the way we did here? Because the next level of resistance is right there. Or are we going to stall a little bit here and then break out? Well, I would say that at this point, as we are in between these moving averages, we might see some getting stall price action here, but then eventually break out. This is what it really looks like going to happen in the market. It's pretty strong recovery. I was kind of waiting for this. See, maybe this is a smaller recovery, but this is definitely more bullish than what I had anticipated. Now we take a look at the Qs, seeing a similar thing. Slightly lower where the S&P is, but it's in between that 20 and the 50-day moving average. So expect some back and forth before we can really break out higher. Now, if we take a look at the advanced decline ratio, what do we see here? 44% to the downside and 52% to the upside. And you can see the plus minus 50 moving average. We are back to those old levels, 51% down and 49% up. So it seems like the struggle is back on, where we continue to plow into some of the outperformers and then sort of continue to be short on those underperformers and have that balanced approach. Now, looking at the heat map today, you can see there was a whole lot of red and a whole lot of green. It's kind of mixed picture today. So I think markets are likely to do this in the coming days, where we just see a lot of back and forth between certain stocks that outperform and certain stocks that underperform. So that's really what we're going to focus on in our possible setups today. Looking at the market outlook, again, we are not at +1. So this is where I think the big recovery is taking place. Now the question is, where do we stall or do we pull back before we're going higher? So you just got to be watching out for that outlook here. I think the easy trade was on this little V-shaped recovery that we are seeing here. So where do we go from here? Well, we'll find out. So what do I have here is potential trade setups. Got 3 longs, 1 sideway, and few nice bearish setups that I have that are continuous to underperform. So let's just start with the first one. Palantir now just hit that 52-week high today. This thing is starting to recover quite nicely here. So this thing, I like it more to the upside. The 529 was the upward resistance. Nice little pullback. You can see that this thing had just a 1 down day and now it's back up to the previous high. So I love the fact whenever I start to see things start to hit those 52-week high or lows, they tend to go a lot longer once they start to hit those levels. Now, taking a look at the next one, this is the one that I had last week as well. That was T-Mobile. You can see that big down day here, but then that's a whole thing has recovered. So this thing is showing relative strength. I think this will continue to play out. And the last one is DoorDash. Same thing. Had a big move here, got a little base here. Now another move higher here. So these are the ones, again, showing the outperformance. They went through that big pullback in the markets. They didn't really have that big dip, as you saw in a lot of the other major stocks. So like those relative strength over there. The second one, again, I have the sideways play is Alibaba. Remember, this thing has an earnings tomorrow. So once the earnings is out of the way, I'll see what, I still like this in a sideways play unless it really breaks out one or the other. Now on the relative weakness, Merck is the first one. Nice little bear, sort of a basing setup here, below the 20, below the 50. And despite that market bullishness and recovery that we're seeing, we're not seeing any money going to this one. So this is, again, a good sign that this is going to stay weak. So I like this to balance the portfolio here with some bears here. So this other one I have here is ALB, ticker symbol. You can see that this thing continues to move lower. So unlike the other ones that are just holding in there, this thing is already breaking lower. So 72.85 is very close today. I like it further down to 70 to 65 area. I like the relative weakness in this stock. Now going into the other one is TripAdvisor. You can see that nice little low base forming here. This might take a little bit longer, but I like a little bear call spread on this one. And then I have the last one is Walgreens. Take a look at that big consolidation phase, and then we're finally breaking out of the downside. So this is another one that goes in the books as a bearish one. So again, I like this approach where, equal amount of shorts versus equal amount of longs. Just, look at that relative strength of weakness. Now for tomorrow, what we expect? Well, I think markets likely to recover. That's just the theme that has been for the last few days. We might stall a little bit in there, but nothing too major. Now, with the economic reports, we have the U.S. retail sales tomorrow, unemployment claims, and most importantly, we got some big earnings, Walmart, Baba. So those are the ones we got to continue watching out for. But I think this is a good markets now where, the last week, things were a lot more volatile and things were going all over the place. Things have calmed down. So this is where we can go back to our usual with the balanced approach. But thanks for joining. We'll see you the next one. Happy trading.